everybody? This is Trading Topic Tuesday, September 21st. Coming at you live. Glenn and Reed here from Hawaii Trading Academy. We are helping you get your trading in line so you can be successful, setting you up for success with creating an environment with like-minded people while delivering awesome content based on our 14 years of trading experience. So tonight's topic, as a recap, we covered or finished our mini psychology series, and we are going off and doing a one-off of a trading topic, and this is a good one because it's totally relatable. Both Reed and I have experienced this within the past 2 trading days since the week started. Lots of volatility, and the topic for tonight is not forcing your trades. Not forcing your trades, because we want you guys to survive. We were going for success here, and we don't want people to trade reckless. So as I go into my screen share, let's see. Go right here. Okay, good. You can see that, right?
Got it, bro. Yep.
Trade like a surfer, Reed. You should just tell me about this.
Yes, so I'll read the quote and kind of expand on it. So, trade like a surfer. A surfer can't force a wave forming. Likewise, a trader can't force a trade. A good surfer waits until they recognize ocean patterns. When the right wave is coming, they place themselves in the best position to catch it and fully commit. So basically, we can't control the ocean, and think of, in a symbolic sense, the ocean is like the market, and we can't really force any trades. We can't force it to happen. We can't make the market do anything. We just basically ride along on these waves, and you either have a good wave or a good trade, or you fall off, have a bad trade, or a loss in trading. So surfing and trading has a lot of symbolism together, and they go well together. And trading, and specifically with surfing, you're out there sometimes for 30 to 45 minutes waiting for just one wave. But one wave could make your day, just like trading. One trade could make an entire month, maybe even an entire year. So it's just really applying patience. And that's what we're trying to get at, is don't forcing a trade. So Glenn, back over to you, my man.
I love that, man. I love that. So what is forcing a trade? Even though it seems so simple, we've came up with a description for you guys. A lot of forced trades occur after losses. Well, this is speaking from my personal experience. Maybe Reed has experienced it differently.
Oh yeah, definitely. No, definitely.
A lot for me. A lot of forced trades occur after losses. Maybe it's something to do with denial that the market doesn't agree with your current analysis, or greed, wanting to make money, or ego, wanting to be right, hopeful more than confidence. The pain is magnified after losing a forced trade. It's just that final dagger. You're already bleeding out, right? And then you're throwing your capital at the market in hopes, crossing the fingers, that it's going to work out. But the market will come up. You just put that final dagger and give it a little twist.
Adding salt to the wound.
Salt to the wound, man. So that is forcing a trade. That would be my experience with it. I mean, there's many other ways people force a trade. And I feel like there's different levels of forcing a trade.
In what way, man?
Like in
Expand on that.
in the description I've described, that's like a last minute desperate forcing of the trade. You can have a super discreet, like, let me just try this. Let me just try this. Let me
Testing the market, right?
test the waters, right? Oh, I wonder if it works. That's a little bit a sign of forcing the trade, right? You're kind of, yes, we have to forward test and really put our thesis or theories to the test, but do it in a way where we can't our perspective, right? If we are correct when we're testing a new method, we can't be like, yeah, Like I'm the man. Like the eagle cannot grow. It has to be like, you know what? Look, that was maybe I got lucky. It could have been. You have to recognize that maybe it was more luck than actual really having the right method and entering at that trade.
Oh,
So we're focusing on habits. Habits, cutting the bad habits. Say the force trade actually worked out better than you hoped. It lays the foundations and builds on bad habits, kind of what I was just describing. Forcing your trade forcing your trades after your analysis, breaking initial trading plan rules. So that's gonna be something for you guys out there to decipher for yourself. We recommend you to set rules and follow them, and we also say know when to break them. Now, what has to be is the consistency. If you're consistently breaking rules, you have no rules.
oof.
You
Yep.
have to be consistent with your rules enough so that you know you can have data and you should have an expectancy of your trading system. All right. So as we type at the bottom, it's saying it's okay to break rules. That's not discipline. That's not following your original plan. However, it's okay to be discretionary with your rules, but that comes with experience in the markets and knowing yourself, your plan, and the instrument you are trading. That is true. I think it comes through time spent, and going forward, man, going forward. So let's on to the next. You want to go through this, Reed?
Yeah, sure. So the underlying issues when you're cycling through trades, and I've experienced that a lot, where in the beginning stages of my trading is I'll have 10 pairs on my watch and I'll find myself just constantly scrolling through the pairs. Okay. And by the time I'm on the fourth or fifth time of checking the A, which is odd dollar or odd USD, I realized like, wait, now I'm looking for something, even though the opportunity is not there. So I'll just read this. You're trying harder to make your plan fit the current market price action, although the market is not providing an opportunity. So you're cycling through. You are convincing yourself that there's an opportunity, and usually going against your judgment, going against your plan. You are also looking for biases through the internet or through the community, through Glenn, like through me. Like you're thinking like, hey, this pair looks good through social media. You know, you like follow a bunch of traders, and all of a sudden, three of them have a similar eyeing of the position that you want to get in. You're like, yep, you know, I'm right. I should enter this trade, even though it's not specifically to my plan. That's where cycling through and forcing a trade starts to play. You become blinded and by the itch because you're really wanting to get in the market, even if you're not in the market. You just want to be in. You just want to trade to run. And this is all summed up to forcing your trade, just feeling that itch, wanting to be in the trade, loving to get that endorphin rush of, oh yes, okay, now I'm in the trade. So that's we want to be careful of that. And as Glenn, I like Glenn. He's honest. Like both of us starting this week, we were together and we were talking about how, oh, these pairs are really lining up, but we weren't in any positions at the time. And we kind of kept each other in check and like a don't force the trade, and we communicated what we felt, what we saw, and that's part of it. And we'll continue on, but just keep that in mind, is becoming aware and thinking of what's happening, what you're doing in the market.
Yeah. And to add to that, the market does not hand out participation awards.
Can you go off of that? Like, what does that mean?
So what we kind of was saying, like you're going on social media, you're looking at blogs and the latest
Yeah,
news
yeah,
headlines. You're what you sometimes you might be underlyingly like building up support or justifying your rash decision on getting it forcing into the market,
yeah,
right?
yeah,
And what happens is when they're so focused on getting in, where do you even get out, right? When do
yeah.
you close your trade for a profit or a loss? And so the market doesn't care if you're following XYZ, all these people, it doesn't care. It doesn't give you that a benefit. It's not going to pat you on the back for jumping in at the right time or wrong time. It doesn't care. So that's kind of what I mean.
No, that's a solid point, dude. Very solid point. Funny, but solid.
So one of our favorite books, uh, Wizards, Market Wizards. Good trading should be effortless. So I'm just gonna read the quote: "In trading, just as archery, whenever there is a effort, force, straining, struggle, or trying, it's wrong. You're out of sync. You're out of the harmony with the market. The perfect trade is one that requires no effort." And that is something that stands out to me, and it's really good. And it's true. It's true. When you enter into a trade and you find yourself holding on to your computer chair and just like, or tapping the desk, hastily, uh, or just stressed or anxious, shouldn't be in the trade. Just cut it already, right?
Yep.
You're either over leveraging or it's not right. You're out of sync, and that could be of that's a sign of forcing the trade. And so forcing a trade, it could lead to over trading, trading too many times, over risking, risking too much instead of your normal 1 to 2% risk. You're risking 5%, 6%. This equals greater losses, which leads to anger, frustrations, and it takes you down the little spiral, man. Basically, when you allow this, you're no longer trading with a probabilistic edge. Big word for me. Now, what's even worse is when you do all this, it actually makes more profit than you ever thought is possible. Wait, what's even worse when you do all of this? It actually makes more profit.
I could
This
go
is when
off of that. It's
oh
like when it actually does work out, like you're breaking the rules and you are forcing the trade in. Luckily, literally luck, it worked out in your
mm,
favor. And now
got it.
that is even more dangerous than losing that position because now it's the bad habit.
Yes, yes. And this is just branching off from our trading sins, trading yin and yang that we covered a few weeks ago, and it could ultimately lead to market self destruction. So market your account go kaput, done deal, lose your trades. So essentially, forcing a trade is allowing emotion and ego to trade and not your higher self. Not you aren't making yourself any better. Cool. You want to go over this, Reed?
Yeah, I mean, we kind of talked about it earlier, but some signs is you're on your third or fourth cycle of the same exact pair that you just looked at 5 minutes ago or less. That could be a red flag that, hey, maybe I should take a step away from the markets now. Or if you're already in a trade and you're constantly checking it every bar, every 15 minutes, every hour, every 5 minutes, and you're hoping that, oh, please go in my favor, please go in my favor, or just hoping that it'll work out or hit my profit, please hit my profit. You're begging the market doesn't know that who you are, it doesn't know what you're doing, it doesn't care. So, or like, yeah, I gotta get into this move is another one where um you begin to think like, if Glenn's in a trade and I'm not, and I begin to think, oh man, I got to get that move. He saw it nice and I didn't get it. So now I got to look for my entry. I got to make my plan fit the market. And that's where you become aware. You have to come aware and you say, wait, I just said I need to get in this trade, or I have to, or even saying I want to get in this trade when the trade's already past your original entry point, or entry signs. You need to kind of just take a step back and say, okay, wait, I don't want to force the trade. This sounds like I'm trying to force the trade. So this all is, another example is like, let's say you're at work and you have only 15-minute break to check the charts. You're in a work state and then you come to the chart state. you're kind of scatterbrained. Let's say it was just a stressful day. You become stressed psychologically and then begin to think about your work, and you're not actually putting your attention. Say a customer really pissed you off that day, or something happened, and you're preoccupied with what just happened in the past. And I mean, it happens, it gets the best of us, and that's life. But we can't bring that type of mindset into the trading or into market, because that's also when we may force the trade. And unfortunately, sometimes it happens and we only find out after the fact. So we need to, again, become aware of, okay, I'm a little stressed. I just had an encounter with someone that didn't go well. So maybe I shouldn't be looking at the charts right now. Just take a step back. I let the charts do its thing and come back in extra 30 minutes or an extra hour, and then I'll take a look. So
Very good.
yeah, that's what I
To
got,
add
man.
to add to that,
Yeah.
the whole focus not scattered, mentally preoccupied. Like zoom out and think about what other market participants you're kind of going against, you're competing with. You're competing with Goldman Sachs, JP Morgan, the big hedge funds, AI, who knows, the Matrix. I don't know, dude. Like you're competing with these big guys who have teams, tons of money, scientists, quants, quants, aka scientists, smart guys, Einsteins, right? So try to reel it back and um, reassess yourself. Be like, look, okay, maybe it's not the best time to look at the charts, right? If I have an edge against these guys, it's gonna take some of my, maybe most of my focus, as much as I can give it. Okay, I cannot go hire a team of quants. I cannot spend tons of money and thousands of computers. Okay, computer power. So maybe flip the perspective there, reset, and um, stay disciplined. Boom. So as we reach the practical takeaways of how to avoid forcing a trade, going back to your plan, you want to review it, you want to follow it, of course, refine it. Just because you have a plan doesn't mean it's always concrete. Just like you need to be consistent with it, right? So you have to double check that the market is displaying your criteria for entry, not adjusting your criteria to current market conditions. That is a good one. Trust your plan and know that when the opportunity presents itself, it will be effortless and it's very obvious to you. This is where you know your plan is important. I can really, let me expand on this, because when emotionally or in psychologically, when you're clicking those buttons and creating that order ticket and you're seeing the market action go, and you're like, okay, I got my entry, I'm gonna click it, hit submit. You shouldn't feel really anything. It should be just like a normal thing, as if you're just going and washing your hands, or you know just a normal routine. It shouldn't feel like, you should almost feel detached from your trading in a way. And that's knowing that shows that you're trusting in your plan. It's like, okay, I know my stop loss, I know my probability, here's the conditions. Okay, good. Let's see how the market goes. Right? That's it. You're kind of you're putting your plan or your system and letting it do some, you're kind of putting it on autopilot. You're letting it do its thing. You have to let it do its thing. You have to give it some room, and you just gotta accept what happens after that. So take a step back from the market. So when you're in the starting to feel yourself going in a downward spiral, right, mentally, take a step back, take a break, get fresh, clear your mind, remember your routines of what you do to get back in the zone. That's what we talked about last week, flow state trading. Do what you guys got to do. So accountability partner. Perfect one. Perfect one.
Yeah.
I mean, same as much as me and Reed, we're just sharpening each other right now. That's about it. And it's same for everyone in the community, in our HTA community. Everyone has their own views and can help. Just because Reed and I are leading the group doesn't mean we aren't learning from you folks. And that's for sure. Keep risk management in mind. Know when to play offense or defense. Lift off the gas when you have to protect your capital. Over time, you will know when to press your bets. So just to clarify that, when you're trading, say you have a normal trading size or a lot size, while your capital is okay and good, and you're making a little bit of profit this month, then go ahead. When you in order to scale, you cannot just stay trading the same lot size. You're gonna be just stagnant. You have to scale up. But vice versa, when you're in a downturn or in a downtrend, right? If your account capital, when we're losing capital, then you have to lighten up your trading lot size or your contract size. Maybe you go to the bare minimum, start trading micro lots just so you can withstand this rough trading patch. Because, yeah, maybe the market isn't simply providing any the right conditions, right? So you just got to weather the storm, make sure you survive it, and then after that, you start building up your confidence and you press on the gas then. And lastly, become aware of your thoughts and actions when the market is in between revealing an entry signal for your plan. So is that patience? Patience,
Patience.
patience.
Summed
This
up word patience.
patience and discipline.
Yeah. I think just to round it all out is becoming aware is probably like we know what to do, but sometimes we aren't necessarily aware of what's happening in the live market. Like we don't know what we're doing. So like that's why sometimes actually talking out loud of what you're seeing or not seeing can benefit you, and saying like, oh, I like this position. I think I'm gonna check. Oh wait, I said I think I'm gonna place an entry. Hold on. I think that's forcing a trade. That's like, yeah, reeling it back is, sometimes that's the hardest thing to do as a trader. So that's just staying patient.
Patient,
You know?
patient. But there's a thing too with being too patient. You're just not gonna act sometimes. Because I've been in that situation where I'm too patient, or I tend to try to look for the most perfect setup, right? And then it works against me because I become hesitant. I think twice before pulling the trigger. I get like I'm unsure. I lack the confidence because I haven't done it in a while. You know what I mean? Have you ever
Yeah.
experienced that?
Oh yeah, yeah.
Yeah.
One thing that really helped guide me is coming off of that. Like I'm looking for a perfect entry. Is I was taught by someone that the market is imperfect, so it's not always gonna, like, let's say you're looking for triple top rejection from three specific candles. It's not always going to present that entry, and you kind of, this is where experience comes in, back testing, journaling, forward testing. It all plays a part, but it's healthy to keep in mind that the market is not going to be perfect. That opportunity is not always going to be perfect, and that's like what you're saying is like you got to know when to press, when to enter. You can't just be paralyzed by maybe or maybe not. So
That's it.
that's actually another good topic. Like when is it okay, like after you hit like 15 losses or something, 10 losses, and or an abnormal amount of losses, and you're thinking like, okay, when can I place a trade? I'm already hurt. Like that, I mean, the real answer is to just place the trade over and over and over again, because you're following that edge, following that plan. But I mean, it's so easy to say, just as like we said, becoming aware of your emotions and what you're thinking is, it's not the easiest thing. It's so easy to he said, she said kind of thing. It's so easy to say it, and talk about it, but it's not the easiest putting into action.
For sure. For sure, man. Yeah, that was good. And I think too that was just one summarizing it, being aware, staying disciplined, and just keeping track of
Patience.
your emotions, man. Yeah.
Yeah, yeah. Cool. And
Perfect, man.
that's pretty much a wrap. Yeah. For forcing a trade, we can leave it open to the floor for everyone and anyone. Diversion of topic. I'm drinking celery juice, bro. Celery, apple.
Right. Oh, I was gonna say, I'm like, I thought celery was green.
Yeah, so celery, apple, carrot, and ginger. Yeah.
That sounds super healthy. Good for you, man.
For health.
Health, health.
A cup of health.
Yeah. So, if anything, if you guys want to share anything that like sticks with you, what stands out to you during this nice presentation with forcing the trade, you guys can come on
Yeah.
and share. But if not, we can wind down the conversation, guys.
Yeah.
Hey guys, sorry I came in a little late.
No worries, bro.
What's
But
up, John? No worries, man.
what's up, man? What's up? Good to see you guys always. Um, Regarding overtrading or when you're kind of in a slump, it really depends on your system. But I know like with mine, once you start to get like 5 to 7 trade losses in a row, typically what I'll do is go back to my journal, assess, and then just focus on one thing, And if that the common theme may be, let's say I anticipated a trade and then wait for the breakout, right? Then I just wait, and then I just focus on that one thing and try to perfect it for the next 8 trades, for example, right? Um, and if I can check off all the boxes and make sure I just execute it properly, then move on to the next, size up. But it's very easy to get discouraged, if you will, right? Because we're only human beings, we're traders, we're human beings. To have all these losses can really take a toll on your psychology. So to kind of get back into that, you don't jump in with full size right away. You kind of scale in maybe a half a position, a third of a position, and then if you start gaining some traction, and then you step on it, right? But that's typically how I approach my own trading. It really correlates with your journal, which helps kind of keep you tabs on you and exactly what it is that you're doing. It's very specific, because everybody has something. Everybody has something. But yeah, I mean, the toe and water approach, in my opinion, is skilling in, if you will. It's best to approach or going back to trades once you kind of get discouraged or your psychology isn't right or you're trying to get a feel for the market, right? Because there's really two things. And actually, Reed and I talked about this in our own little private Zoom session. But if you have a system with an edge, right? Your system works. Your criteria is sound, and you execute it. Well, if everything is sound and you execute it and you're not getting the results, then it's not you, it's the market. And now that's time for you to adjust. Whether you got to step out to adjust or with like my kind of system, we scale down. If we typically trade, let's say, uh, uh, 5 lots, now we'll go back to half, whatever, right? Or if you typically trade 100 shares, go to 50 shares, whatever. That's the kind of adjustment you got to make. As long as you are executing to the best of your ability, as perfectly as you can, right, on your end, then now it's just a market, and now it's just adjusting from that.
Yeah, Glenn said it in one of our very first videos. He said gaining confidence back after consecutive losses is more important than actually like a winning trade. And he mentioned, yeah, like exactly what you said, John, right on the hitting the nail on the head right there is you want to scale in slowly because that your confidence kind of wavered right there. And that's very important. A key point I took away from you, John, is that don't stop trading. So in my personal experience with people I know, they've completely stopped trading because they had 2 months of losing. And I'm just like, what are you doing wrong? And he's like, no, trading's not for me. I'm like, all right, I mean, that's you, dude. But it's just don't stop trading after even 1,000 losses. You just got to refine and continue going smaller lots, smaller sizes, refine your plan, whatever that may be. Exactly what you said is going back to your journal. Going back to your journal is the most key thing. Journal is your mentor.
Yeah, 100%, 100%. 100%. And with that being said, in regards to don't stop trading, I want to add that it doesn't mean that you're forcing trades. By the way, right?
Yep.
You have to make sure if the signals are there, you take it, whatever it may be, because everybody trades different. Okay? Yep. It has to be, everything still has to be intact. You still have to have your sound principles, and you are executing as perfectly as you can, and the signals have to be there. And quite often times with newer traders, when they overtrade, they see things that are not there on a chart. They want to see what they want to see, one of those things. And you got to be very careful with that. You might get chopped up, and then you just lose not only your capital, but you lose your mind, your psychology, and that is capital preservation and psychological preservation is equally as important. It's so important.
Yep.
Making the market fit, making the market fit making your plan fit the current market conditions.
Yes. But like one of my mentor, the reason why I brought this up is because Mark Minervini, he's a big mentor of mine, and he'll set out if the signals are not there, for several months on end. If it's not there, it's not there, because he knows once he gets back into the market, he's going to make it back plus some. There's no rush to get back in if the signals are not there. But it depends on your system, but more important, like everybody's covering right now regarding psychology, and don't stop trading. Allow your journal to tell you about you, what to focus on, because everybody has something. Right?
Good point, man. Thanks.
Love it. Totally agree. I mean, you put the computers away, the trading software, the platforms, the charts, you put that away, you're still going to have your emotions, yourself, your thoughts, your decision making. And so that's going to be key, especially when you're in a slump or things are not going your way. You're going to have to figure out how to get yourself out of there. And so that's just going to be a big one on just however you may do it. Take a break, step on the side, go relax, go to the beach, whatever, blow off some steam. But yeah, mental capital and actual capital is the same. It's the same. Same with importance. Oh yeah. Very good, man. Love it.
Mental capital preservation, almost more important than actual capital, I would say. Because you could always make back the cash in time. Sometimes once you get scarred from the market, so for some people, I think all of us in here are beyond that, but you get scarred from the market, some people don't want to trade anymore, man. Speaking of my boss, right? He lost like 6-figure account because someone, it's golf course indicator. Someone told him, "Oh, hey, put your bets on this trade." Anyway, lost like 100K or something. He works at Microsoft. He's like a lead manager or whatever, and he lost a 6-figure position, dude. And he's like, ever since then, I'm not trading. I'm like, well, all right. So.
Yeah, and it's interesting. You get to hear that from people and the way that they react to it, and it kind of displays like what kind of language they're using and where they at with accepting it, right?
Yeah.
Like you hear the traders who lose hundreds of millions. Yes, they have to take a couple months off, but they're back at it. They raise capital and they're back at it, and they're killing it,
making twice as that in the following years, right?
So like, I don't know, man. I think I would call that iron gut, bro. Like lose a couple $100 million and come back, bro.
That's some solid confidence too, man. Like not only in your edge, but like just overall general confidence in life.
Yeah. And then like I said, it goes beyond the trading desk, man.
Yeah,
It has to be It has to be in you. It's you versus you.
But you know, they
Okay.
say the quickest way to be a millionaire is to be a billionaire first, right?
Oh yeah.
Yeah,
Oh yeah.
that's funny. Yeah.
Well, no, man. Yeah, I mean, some people, once they get demolished and just mopped, they never want to hear the word market again.
Yeah.
And oftentimes it comes with people that have really unrealistic expectations of the market. They want to extract the money at will, but they don't want to put in the time and effort to really find a system with an edge and pay their dues. Everybody pays tuition to Wall Street. It just depends on how much you want to pay, and what are you willing to do to make sure you get the right schooling of hard knocks from Wall Street, right, or whatever market you're trading.
Love it, man.
How much you're willing to pay. Yeah. I when I first got in the army, man, there was a guy. I told him like I was starting to get interested in trading, foreign exchange, and I'm like, man, I want to do this for a job. Like this is what I want to do. And like we were in a meeting, man, and he called me out and was like, you'll never be able to do it. You'll never do that. Like that's like he said some stupid analogy, but it pissed me off. It motivated me it fueled me up in the best ways possible. And if you could see me now, but no, uh if but like he really like he like other people in the room were like, yeah, you can't make a living off of that. That's a heresy kind of thing. Like it's not possible. You have to just buy and hold. So what I found out is this dude, he got in a Dell position, made up to like $54,000, and his account, he showed me, it was like at 32,000. And so like he didn't make money since his Dell position, but he kept losing after. So essentially he got lucky, right? He didn't have a journal, he didn't have a plan, all this stuff. But at the time, like, I was just coming in the market, I didn't know all this. So like it just, people, we were talking about, people are just so scarred that they try to say like, no, it's not possible, it's not possible to make a living, so they're not educated enough, they didn't pay enough for the tuition.
In the words of Uncle G, Grant Cardone, people hate on you and tell you and try to sell you their dreams because they given up.
Yup.
They given
True
up. So they hate on you
facts.
for doing the
Yeah,
thing that
yep.
they gave up
Facts, facts, facts.
Uh,
Yeah.
doing.
oh yeah, dude.
Yeah.
The ones that are typically never really amount to anything will tell you it's impossible.
Oh,
That, that's
100%.
that's very true because they
Very
don't
true.
believe that it takes any kind of effort. This is why most people think this is gambling. And if you really, really study to the depth and get the experience, you'll come to find that you try to have a system that becomes a casino, right? There's a big difference. And people don't know how to draw the fine line between a casino, which is a business who generates money, who always comes on top after a series of, wins and losses, versus a gambler who just comes in hoping for a jackpot and then walk away and right off to the sunset. I mean, it doesn't. This is why the old saying goes, man. Like it doesn't matter how much money you make; it's how much money you keep, even if it's millions.
Yep.
You can lose millions easily, easily.
Yep.
But to hold onto that money and to grow that money, that's a whole nother level of skill set that has to be developed over time, man. It just takes time, dude. It takes time. You
Yep.
gotta be patient with that. It's a process.
Love it.
I like the age-old saying is, if trading was easy, everyone would do it. It's easy to make money, but to do it consistently, to keep it, that's the hard part.
Yeah.
One of the hard parts. There's many hard parts to trading.
Keep it and grow it. Love it.
But yeah,
Love it, guys. As we wind down this conversation, next week for our trading topic Tuesday, we're going to be talking about how to exit the trade. Talk about different ways to exit the trade. Everyone talks about how to get in the damn trade. Like, okay, what happens next? You don't get paid for entering the trade. You get paid when you exit.
Yeah.
Okay, so that's gonna be something cool. We're gonna be cooking up. In addition to, We have been hard at work the past 2 days, man, slamming out content. Oh my goodness, can't wait till we get to it. That's gonna be up and coming very soon, hopefully sooner than later. But yeah, thank you guys for jumping on. We appreciate your time. Love conversating. Always so good to talk story with you guys.
Yeah.
Have a great
Love it.
night. Have a great rest of your week, people.